Good morning, and welcome to the 10th Annual FinTech Innovation Lab Demo Day. First and most importantly, I trust that all of you and your families are safe and well. Today would mark the 6th year for Bank of America hosting Demo Day. Today, of course, is a little different as we come together virtually for the first time. But I'm still proud to say that this is the 10th year of Bank of America sponsoring the program. And once again, the lab has brought together some terrific companies, ClauseMatch and Data Fleets among them, who you will hear from later. So I'd like to thank the Partnership Fund for New York City, Accenture, and the venture community for the incredible work you have done over the past 10 years. The Partnership for New York City works across government, business, labor, and non-profits to enhance the city's economy and maintain New York City as a global center for commerce, culture, and innovation. Over the 12 weeks of the program, my peers and I spent hours giving the lab companies specific feedback and advice on a range of issues, including, are they solving a really high priority problem for all of us? And do they have a compelling value proposition? We also provide guidance on how to navigate what can be our complex procurement processes and on how to meet the information security requirements that are so important for us as regulated companies. All of that with one goal in mind: to help these companies secure a purchase order and the growth that's so important for their future. And I'm very happy to say that solutions from several past graduates of the lab are now in production here at Bank of America. Overall, the companies from the lab have raised over $1.2 billion and created more than 1,200 jobs. Jobs that are going to be increasingly important for New York City as we recover from the pandemic. One of the most unique aspects of the lab is the way in which executives from over 40 leading financial services companies that often compete with each other, come together and collaborate to help these companies grow. In doing so, we're all supporting New York City's economy and continuing to ensure that New York City remains at the center of FinTech. And it's also events like this one today which will help ensure companies like Bank of America and our peers remain on the leading edge of financial services innovation, and with the partnerships that are so important that we build over the course of the programs. Thank you all for your participation, for your commitment, and your incredibly hard work. Enjoy the program, and thank you again.
David, thanks very much to you, Neil, Zane, and the Bank of America team for virtually hosting us this morning and your continued support. And thanks to all 43 of our financial institution partners for their time and engagement with this year's FinTech Innovation Lab class. Especially in this challenging environment, this broad-based support during the past 3 months has been invaluable. Over the past 10 years of the FinTech Innovation Lab, our graduates have created successful partnerships with many of our partnering financial institutions, and as David mentioned, gone on to raise over $1.2 billion. Their success can be tied directly to many of the supporters of the FinTech Lab, including senior executives from financial services who help the companies understand what a large institution actually needs and why they'll buy it. Our execs in residence and entrepreneur mentors who share their experience of scaling a successful tech company, and venture capitalists who provide insight on what it takes for them to actually invest in a company. On behalf of Accenture, the Partnership Fund, and the FinTech Innovation Lab, thanks to all of you who've given so generously of your time and expertise. We run the FinTech Innovation Lab as a civic program to ensure New York remains a leader in all aspects of financial services. We believe that this year's class and the rest of the FinTech sector can be an important contributor to the recovery of the New York City economy. Over the next hour, you'll hear a snapshot of what each company is doing. Given the quality of this year's class, we're pretty sure you'll come back and want to see their longer pitch and meet them in the breakout rooms later this morning. And now, on to the main event. Our first presenter is Charles Polyakov from Noma. He'll be introduced by Coley Corte, who's Senior Vice President, Global Head of Business Transformation at AllianceBernstein.
Hi, I'm Coley Corte of AllianceBernstein, As we all know, data is changing the game, both in sports and in business. In sports, we see this directly in baseball, basketball, and other sports where decisions are being made differently by players and coaches, both in strategy and live on the field. And we see that every day in our business too. More data is being created and stored than ever before. Leveraging that data is becoming table stakes and a requirement for us to do business, to compete, to win, to make better decisions, and to meet and exceed our customer expectations. Yet we're all challenged in discovering, storing, organizing, and most importantly, leveraging and harnessing that data. That's where Noma comes in. Noma is a data toolset and platform that's designed to help accelerate the consumption, alignment, and application of that data. We had the pleasure to work with them during the labs and to explore solutions across our firm, from investments to distribution, data science, and research. We were pleased with their speed and responsiveness, the quick applicability of their solution, and they were able to quickly support teams and stand up proof of concepts across the business, both in traditional and unexpected areas. We were quickly able to see the benefits of the solution in pairing disparate data sets and allowing us to both draw insights and visualize the data differently. And with that, it's my pleasure to introduce Noma. I'm sure you will enjoy learning about them as much as we enjoyed working with them.
Hi, I'm Charles Polikoff, the CEO of Noma. We're a data technology platform that works with organizations all over the world to help them discover, access, and make use of the data they need. Now, what if I told you that 92% of the time your organization spent on data provides very little ROI to your firm? That 92% is spent on a whole host of activity that doesn't differentiate you from your peers, doesn't provide you with a competitive advantage, nor does it help propel your organization forward. That 92% is spent on just making data useful. Well, at Noma, we knew there was a better path to insights than this. So after years working with the IMF, the World Bank, and other multilaterals, helping them generate a higher ROI on the time they spend with data, the idea of Noma was born. The Noma of today is a data technology platform to help you discover all of your global, subscription, alternative, and proprietary internal data. We provide you with the infrastructure, such as data management, knowledge graph, and search tools to provide a unified view across all of those data assets. We also provide you with a front-end experience, a bit like Squarespace for data, so that you have portals, easy to build dashboards, as well as visualizations, along with integrations into all of your workflow tools like Excel, Python, or R, so that data can be made accessible and useful across your entire organization for both your technical and your non-technical users alike. So now, if you're that organization made up of analysts, customer-facing personnel, or data scientists, you now have the tooling, the technological muscle, as well as the ecosystem so that you can get that high ROI on the time you spend with data. You know, in ancient Greece, the word Noma meant idea. We'd like to invite you to join firms like McKinsey, Fitch, the sell side, as well as dozens of buy side organizations that we work with to help generate your next great idea. I'd like to thank you for taking the time to hear the Noma story today.
Good morning, all. My name is Rob Fasanello. I'm with Wells Fargo, and I'm here to introduce Sigma Ratings. The key responsibility of all financial institutions is to understand exactly who their customers are. This is true from when the customer first walks in and is true throughout the entire life of the relationship. Managing the process of gathering the right information, analyzing it, properly establishing relationships in order to determine real signals amongst the noise comes with considerable cost and a sustained effort. Sigma Ratings can help. Their technology provides users the ability to quickly process corporate registry data, HEP, sanctions and enforcement actions, news, social feeds, and proprietary customer data to monitor entities and individuals. The Sigma platform converts all of this data into actionable intelligence of value to a number of departments within any financial institution. It was a pleasure to work with the Sigma team. They embrace the lab with an open mind, seeking direct feedback to make their product better. They clearly have the expertise and passion for what they do, the results of which can be seen within their product. With that, I give you Sigma ratings.
One thing I learned working in counterterrorism in Afghanistan and the Middle East is this: nothing is riskier in any business relationship than not seeing the full picture. We help our clients see the full picture, and we do it in less than 30 seconds. I'm Stuart Jones Jr., and I'm the CEO and co-founder of Sigma Ratings, and we are the smartest way to evaluate risk in any relationship. Business has gone global. Our client bases are increasingly global. But understanding the financial crime risk in those relationships is absolutely critical. That's true whether you're a regional Midwest bank or you're an international financial institution in the Middle East. Understanding your clients and the risk that changes across them is not only good business, but it's also the law. To keep up with this, institutions are leveraging a myriad of approaches, including antiquated in-house systems, databases, multiple data providers, and increasingly a whole lot of manual work. And this is a problem because it's time-consuming, it's expensive, and it oftentimes misses risk events that people should know about. Would it be great if you had everything you needed all in one place? Well, with Sigma Ratings, you can. Our technology distills the data outside of your organization and converts it into one single intelligence stream that can be used at the point of client onboarding or monitoring clients that exist into the millions. We deliver our data via API, via secure data transfer, and our web-based app called Terminal, which can be up and running out of the box in 5 minutes or less. In terms of traction, we're already working with global banks, broker-dealers, professional services firms, and governments who are relying on Sigma intelligence to make faster, more confident decisions. And within those organizations, investigative groups, onboarding teams, business units, and even credit analysts are finding the most value. In fact, one firm here in New York recently brought our technology in to upgrade their entire risk management solution by leveraging it not only to do onboarding, but to monitor thousands of their relationships and counterparties around the world. Clients choose Sigma because of our domain expertise, because we're technology forward, because we're helping them improve their risk management, and because they're looking to cut costs. In many instances, we can save institutions up to 30%. If you're interested in learning more about what our technology and our company can do for you, please check out our full presentation, set up a demo, or learn more at www.sigmaratings.com. Thank you.
Hi, Bill McNulty with Capital One. For most of the banks behind the lab, the use of machine learning models is key to driving business performance. But how we develop these models is changing. First, there's tremendous growth in data both inside the enterprise and outside. And secondly, there's a proliferation of regulations governing the use and privacy of this data. That's where DataFleets comes in. They've developed a solution to help you maintain the privacy of data while enabling data scientists to gain insights and build models on that data. We and the other mentor banks have developed a number of interesting use cases with them, including how do we test and evaluate external data before we buy it? And how do we gain the benefit of analyzing data across LOBs and jurisdictions without moving the data? We've been super impressed with the team, and here to tell you more is the CEO and co-founder of DataFleets, David Gilmore. Thanks.
Hi, I'm David Gilmore, the CEO of DataFleets. We've heard stories about waiting 6, 12, and even 18 months to get access to a single dataset. You've shared with us that your financial and insurance data is restricted by hundreds of information barriers. I've worked with this sensitive enterprise data when I was the lead data scientist at Digital Reasoning, and I left Stanford a few years ago to solve exactly this problem, information barriers. At DataFleets, our vision is to create a world where 18 months of waiting can be now. And it's arrived. The revolution is in distributed computing, wherein we can ship analytics privately and securely to any database anywhere in the world and perform analytics without having to move or manipulate the underlying data. Current models for fraud detection, pricing, underwriting, and customer prediction are limited by information barriers. But with data fleets, you can leverage all of your data across your data silos compliantly and privately without exposing sensitive information. You can combine, transform, and analyze data residing anywhere in the world, and we mean anywhere. You can accelerate your cloud migration journey by creating a single privacy-preserving, single semantic layer across AWS, GCP, Azure, Alibaba, and even on-premise environments like VMware in your data centers. You can even run analytics directly on your customer's iPhone and Android devices. And yes, it includes the full range of analytics capabilities that you would expect, including SQL for data analysis and machine learning using tools such as TensorFlow, Apache Spark, H2O, and scikit-learn. The FinTech Innovation Lab has given us the phenomenal opportunity to build out new, exciting use cases like fraud detection across multiple geographies and credit card analytics that accelerate working with third parties with alternative data sets. We'd love to share more with you about this revolution in enterprise AI and analytics. Your next step is to sign up for a demo at datafleets.com. Will you do that? I personally guarantee it will be worth your time. Once again, we're Data Fleets, and we privately and securely unify all of your data for analytics. Thank you.
It is my pleasure to introduce Alchemy today for Demo Day. When I think about Alchemy, two things come to my mind. One, how well Harold and team works with us at different levels of TIAA, both executive level and also with frontline tech teams. And two, how impressed with their technology is. In our business, pension rollovers is a frequent and important use case. Today, that process is very human intensive, time consuming, and sometimes error prone. We're working with Alchemy to automate this process and make it real time. When we implement this process, users will be able to upload their documents, and Alchemy will process their documents in real time, allow the customers to validate their data, and submit their documents. And with no human intervention, the rollover process will be complete. Like I said at the beginning, we are thrilled with our partnership with Alchemy so far and looking forward to working with them for a long time to come. Thank you.
Most work in the enterprise today still gets done in emails and in documents, and no one's expecting that to change anytime soon. Imagine an operations analyst working to onboard a client, having to go through PDF documents and spreadsheets full of customer data and financial data to get that client live to consume your products and services. Or an analyst in investment operations looking to go through performance and exposure data to accurately account for investments in hundreds of assets. Or compliance analysts that are trying to get lists of securities into your trading systems to make sure that you're not trading on restricted stocks. It's workflows like these and thousands of others in enterprises that are creating bottlenecks for digitizing business processes, becoming more agile, more resilient, and being able to take action. I saw this up front at Bloomberg working with front office executives, and my co-founders had experience working on AI systems, and together we launched Alchemy to tackle this problem. Our core product, Alchemy Data Inbox, brings automation to business analysts. Think of it as a machine learning boost that becomes a co-pilot. All the manual repetitive tasks, the data extraction tasks are removed from the workflow, and the cognitive work is done by the analyst. This design is called a human-in-the-loop design that dramatically accelerates the workflow and takes and pairs human comprehension with automated capabilities as part of the Alchemy platform. Now, we've been able to work with some amazing clients. We worked with a global fund-to-fund that has deployed Alchemy Data Inbox, and the productivity of analysts have doubled. They've removed half of the errors, and they're able to provide dramatically faster client reporting. We've been selected by a Fortune 100 company that's working with us to accelerate the onboarding of billions of new assets onto their platform. And SimCorp, the global FinTech platform, has selected Alchemy to help bring transparency to alternatives data, all the accounting data that's in private equity, cash calls or distributions, that's providing a big manual headache for all of their clients. So based on working with those clients, we were able to raise seed financing in February, led by Canaan, as well as with Workbench in New York and SimCorp. We raised $5 million to accelerate our growth. And this year in 2020, we really focused on working with a bunch of great clients to provide additional deployments of Alchemy Data Inbox. And in 2021, we expect to be back out in the market talking to investors. It's been fantastic to be part of the New York FinTech Lab program. Thank you for tuning in, and we look forward to tell you more about Alchemy. Thanks.
My name is Jonathan Wells, and I'm here to introduce Summer. I'm a mentor with US Bank. The other mentor institutions for Summer were BlackRock, JP Morgan Chase, Morgan Stanley, KeyBank, and MasterCard. Summer is a platform which was built to help student borrowers by maximizing their savings. Summer have built an excellent website backed by a sophisticated optimization engine, which behaves like TurboTax for student loans and suggests alternative programs for the borrower to take advantage of and to save money. So far, Summer have saved 25,000 borrowers an average of $320 per month. We believe there is a lot of scope for integrating Summer's capability with larger banking institutions for the benefit of their customers. We here at US Bank are currently in the middle of reviewing a trial program to connect some of our customers in collections with Summer in an effort to alleviate some of their financial issues and help them recover. With that, I will hand over to Will Seeley, founder and CEO of Summer.
Hi, I'm Will, and I'm the CEO of Summer. Summer exists to help student loan borrowers navigate the complex repayment landscape. We do this by helping the borrower first sync their loans with our proprietary loan integration into all of their federal and private student loans. Next, we're able to make a customized recommendation to the borrower, helping them check their eligibility across over 100 different student loan repayment assistance and forgiveness programs. And then finally, once we find the programs that are right for the individual and make a recommendation for them to enroll, we assist them with that enrollment A to Z, facilitating the application submission on their behalf. Summer uses this digital platform to help borrowers navigate, and we supplement that with a team of student loan experts trained to be able to answer any of the toughest questions about borrowers' complex student loan situations. Moreover, our team builds on expertise from dozens of different companies across FinTech and tech more generally, and that includes companies like Plaid and Wealthfront and StreetEasy. And most recently, Summer is excited to announce that we've partnered with over 150 different organizations ranging from companies to colleges, unions to financial institutions. All of these partners are excited about Summer because of our holistic, robust product offering and providing that to their community of borrowers that need help. We're able to unlock an incredible amount of cash flow, on average saving borrowers $3,600 a year and an estimated total repayment savings of $31,000. We've completed our Series A last year, raising nearly $10 million, and to date have raised over $13 million. We're gearing up for our Series B next year, and we're really excited to expand the team from its current size of 25 to a much larger team to be equipped to tackle this solution nationwide for millions of borrowers. Thanks so much.
Thanks, Will, very much. What you're doing is really important. And really hope that you all enjoyed the first 5 presenters. You'll get to hear the balance of the class after a few minutes. And now I'm really excited to welcome Fred Wilson from Union Square Ventures and also one of our board members for a Fireside Chat. Good morning, Fred. Thank you so much for joining us here on Demo Day for our FinTech Innovation Lab. We really appreciate you taking the time. And
pleasure.
It's our 10th anniversary. It's not exactly how we were planning to spend the 10th anniversary on Zoom, but here we are. So thank you for being flexible and joining us this morning. I think it'll be a really interesting conversation. I'm looking forward to it.
Yeah, me too.
So let's get right into it. We are now day 110 or something for post the pause in New York City for COVID-19. So let's start with that. As you've been seeing it, what have been the major impacts on venture, on tech, of the shutdown, of the COVID? So what are you seeing?
Well, you know, I have a little bit of a bird's eye view into this, not only because of our portfolio, but also because I'm the chairman of Tech NYC, which is the sort of the tech association in New York City, and I've talked to a lot of members of that org. And you know, I think that the tech sector probably has come through the COVID pandemic better than most industries. I think that's because a lot of the products and services that the tech sector delivers are delivered in software, and so you know, they were not as negatively impacted. And I also think that you know, the pivot to working remotely went pretty well for most companies. I think much better than most companies would have thought it had gone. So for me, the big takeaways are that the tech sector may have actually been a beneficiary in a small way from the pandemic, in that a number of sectors saw a pretty significant uptake of their service. A good example of this is online food delivery, which I've been told only about 3% of the US households were using online food delivery before the pandemic. And at its peak, that number was north of 30%. And while I don't think that all of those households will come back, will continue to use online food delivery, many of them will, right? So it was a big sort of adoption moment for that. And there are a lot of other examples of that as well: online learning, telehealth, remote work, things like that. So I think it's not that all tech companies came through unscathed, but I think a lot of tech companies came through largely unscathed, and some tech companies actually saw their businesses improve. Particularly companies in e-commerce, I think would be a sector that's probably done particularly well. So it is it's been a relatively painless moment for the tech sector, but it has been a very painful moment for many people and many industries. And so, it doesn't necessarily feel all that good that the tech sector, was spared, because, there's so much damage, all around us. But, I do think that specifically tech has come through pretty well.
So I think, just to flip that around, then that actually the good news of that is that tech then is likely going to be a really significant engine of growth for the economy. Because particularly in New York City, we've got a pretty big hole that we're going to need to fill. And so any thoughts on how they can contribute to that? Because I think we need economic engines to get us out of this crisis.
Well, hiring, right? I think the tech sector has got to get back to hiring. And I do believe that many tech companies paused hiring. We saw at Union Square Ventures, we keep a job board, and we saw the open positions go from about 1,500 down to about 800 during the pandemic. And that's all across our portfolio. So that's not just in New York. So many companies paused hiring, but I think it's time that the tech sector get back to hiring. So that's one way I think that the tech sector can help New York recover. And I think another way the tech sector can help New York recover is getting people back in offices and working again. That's challenging for a couple reasons. One is that some employees aren't going to feel safe going back to the office, and also many people are not going to feel that comfortable riding the subways. So one thing I think is interesting is the possibility that companies will start to create maybe satellite offices, which I think could be really interesting. If you could imagine,
spread the wealth a little bit. So
correct.
Yeah, so it's not so concentrated in the Union Square area, 14th to 23rd Street, but actually out in Brooklyn or out in Queens or up in the Bronx, Staten Island.
I think that would be terrific if you saw a company like Google or Facebook have a satellite office in Brooklyn and a satellite office in Queens and a satellite office in the Bronx. not only would that be great for their employees who live in those neighborhoods, much easier to get to work, but it would also start to engage them in those communities, right? And and that's one thing I think that isn't good about New York tech is that it has been so Manhattan focused. And so I think a lot of tech companies don't really think about the outer boroughs and the broader, New York City community as much as maybe they could or should. So I'm hopeful that maybe the need to be more responsive to the transportation issues will, maybe help with that.
So do you think the trend to work from home, how's that gonna, there's been a lot of chatter around a number of companies saying people can work from home or remotely permanently. Do you think that's gonna be a long-term trend, or is that just while we get through, until there's a vaccine and people feel safer being around other people in groups?
I think that the pandemic has taught us two things about that. One is that people can be very productive working from home, much more than maybe we thought they could. And distributed teams can be much more productive working in that way than we thought they would. So that's one thing we've learned that I think will cause companies to be more open to that way of working. But I think the other thing we learned is the exact opposite, which is how much we all want to get back to the office and be with each other, working with each other. So I think what we're likely to see is not a wholesale move to work from home or remote work culture, but one that is more accepting of that when someone's got a sick child or some other situation that makes it harder for them to go to work. I think companies are going to be much more comfortable with the idea that someone can be productive working from home. But I also think that companies are going to want and create the right incentives for people to continue to want to work together in an office. So I think that's just going to mean being creative and creating new ways of working, like the one that we were talking about, like a hub and spoke model with satellites, or a day or two a week where people are encouraged to come to the office.
So let's switch to venture. So what are you seeing in the venture community in terms of are deals getting funded? Are people funds raising money? What's happening to valuations? And then how many people are investing in entrepreneurs that they've met on a video conference but never in person? And do you think how's that going to work over the next, say, 18 months when we're not really getting together as much?
So when everybody, left their offices and started working from home, and the economy started losing millions of jobs, a lot of people thought that the venture industry would contract, and that hasn't really happened. I haven't seen the data, but anecdotally, I think that the venture industry has been about as active in the second quarter as it was in the first quarter. And some of that is because, as I explained earlier on, the tech sector has not really been that badly impacted. And then also, a lot of money has been raised over the past 2 or 3 years into venture funds, and it's our job to deploy that capital. We can't just sit on the capital taking management fees. So I think the combination of those two things has caused the venture industry to remain quite active, surprisingly so, I think. And we have been too. We had a very busy first quarter, actually the busiest quarter ever in the history of USV. And we thought that the second quarter would be significantly down from that. And it's down a little bit, but not a lot. And I'd say the second quarter is probably one of the top 5 quarters that we've ever had at USV. So we continue to be quite active, and we see that with lots of other firms as well. The second issue that you raised is one that surprised me, honestly. I am seeing a lot of transactions happen where we're meeting teams over Zoom and ultimately deciding to invest in them.
And those are people where the first meeting was on Zoom? You hadn't met them in person before?
Yes. And we went back and looked at this. In the history of USV, we had done that 3 times before the pandemic. Literally 3 companies that we had invested in out of maybe 100 over the history of USV were people that we never met in person before we put the money into the company. So that, and those 3 companies performed as well or better than average, right? So that gave us some confidence that we could do that, and we've now done that another 3 or 4 times. So I'm not saying that that's ideal, but it is interesting that if you're willing to do that, it also is possible that you could increase the geographic scope of where you might be willing to invest, right? If you're really willing to invest in somebody that you've never met in person, does that mean you could invest in companies in Asia or South Asia or Africa? Now, we haven't taken that leap. We haven't said, oh, if we can do this, why does geography matter? But I do think that it's a logical question, and that we may see the venture industry become more ambitious in terms of geographic investing.
Another big issue in tech is privacy. And with all the increasing data that are in the hands of the big enterprise companies, different agencies, where do you see, what are your thoughts on that long-term balance between data, privacy, convenience, and particularly right now with COVID, the need for public health to know where people are that may have had COVID and to do the contact tracing. That in itself has raised a whole separate set of issues. But it gets that core issue of privacy versus convenience, and in this case, public health.
So I think we will see more and more privacy legislation, GDPR in Europe, California privacy, and companies are going to have to comply. And I think that's a good thing, although like all regulations, you know, I wish they were written in a less bureaucratic and cumbersome way, but nevertheless, GDPR, for all its faults, I think has been good for the industry and has caused people to clean up their act pretty significantly. And so I don't love the legislation necessarily, but I believe that it's ultimately going to help having rules that people have to follow. And then also, I think companies can compete with the big dominant tech companies by creating privacy-focused competitors. The best example, the one I love, happens to be a USV portfolio company, is our search company, DuckDuckGo, which is a private search engine. So they promise that they do not store any of your searches and they do not use any of your search data to improve their search engine. Now that results in a slightly less good search engine, but what has happened is that now close to 2% of all searches in the US and more than 1% of all searches around the world are being done on the DuckDuckGo search engine. So you might say, well, that's not a particularly large share of the market, but it turns out it's actually a lot of searches. And they've been able to build, you know, a really, really good business. And so people should do that in email, and people should do that in social media, and people should do that in all of the big categories, and just compete on the basis of privacy. That will do 2 things. One, it'll give people a private option if they want it. It will also force the big companies to see that that's a competitive vector against their business, and may cause them to adapt, you know, and change their ways to protect their franchises. So
privacy as a service could be a new category, for example.
And there are people doing it. Now, the thing that's challenging is that most people will not change their behavior just to get privacy. So and DuckDuckGo is not as good as Google, right? So, you know, the only people who really use DuckDuckGo are the people who care more about privacy than the average person by a fair measure. And if you watch what people do with respect to privacy, it is that they use services every single day, which are not very good on the privacy issue, and they don't, you know, change and use the more private options. But I am optimistic that over time, the private options will get better, people will care more, and we will see this become, a more important thing in tech, but it's going to take some time.
So Union Square was an investor in another company that's been very much in the news, Twitter, and is specifically been in the news for the fact checking that they've started to do. And so on a more general level, what are your thoughts around the talk now, the social media platform should be treated as publishers or distributors? Should there be changes to Section 230, the regulation of content? Sort of that's a whole new area that's sort of come to the forefront.
Right. Well, with respect to Section 230, I think we got to be careful, because if we expose platforms to liabilities that they have not been exposed to before, they may change their ways of doing business to protect themselves. And so that could mean that they will stop doing certain things that we actually want them to do. The law of unintended consequences is a really interesting thing to think about. So I'm not saying that we shouldn't potentially play around with 230 on the edges to try to make it better. But I think the idea of all of a sudden saying to these companies, you're publishers and you're exposed to all the liability that publishers are, probably not going to end up being a good thing. So we got to be careful about that. With respect to the fact checking, I kind of wish Twitter had been doing this for a long time, and I would like to see them do it not just with the president's tweets, but with the tweets of anybody who is maybe a verified person on Twitter. So to say that, or maybe they create another category. Today, it's either you're just a regular user of Twitter, or you're a verified user of Twitter. And the verified users of Twitter basically have sort of a slightly higher level of that they are who they say they are, right? So maybe Twitter should create an even higher category, which are people that are influencers, people of influence, right? And if they had that, I think that they should be fact checking the tweets of people of influence.
Yeah, and you could do that based on the number of followers they have. You get above a certain level, you have that. Then you define influence based on number of followers, and it's automatic. Right. So therefore, you take the judgment out of it. So you have more than X followers, you're an influencer.
Right. And if a tweet is making an assertion that is not clear, is not crystal clear that it's true, then I think putting some sort of list to here's what the facts are, I think is totally valid. In fact, I think it's a great reaction, because the idea that Twitter should censor those tweets, these are people of influence, right? And so in a way, you want to give them the opportunity to speak publicly, but you also want a mechanism to make sure that people have the opportunity to see whether or not what they're saying is in fact accurate. So I would rather see them do what they're doing and do it more broadly than them just taking down tweets that are potentially problematic.
Yeah, and because Twitter has become such an important part of so many facets of people's lives, in particular, movements. And so I want to, with that, go back to something you mentioned briefly at the beginning, but which is very much in all of our minds, which is George Floyd, the social justice movement, and the need to have the world do things differently. So we will never go back, and to some things we should not go back to, and this would be one of them. So as you mentioned that venture has been, was traditionally a very sort of white male environment, with not a lot of diversity either of gender or economic background or ethnic background. So what are some concrete things that you think the venture community, the tech community, who suffers from a similar set of issues, can do to address some of the equities that exist in the industry?
Well, there's a whole bunch of things that we can and should and will do. But I think maybe the simplest way to frame it is that 5 to 10 years ago, the issues around gender equity in venture became loud enough and painful enough that many in the venture industry realized that they just had to change the way they were behaving. And if you look at the progress that the venture industry made and the broader tech sector has made with respect to gender equity over the past 5 years, is pretty significant. We're not yet at a 50-50 ratio on boards. We're not yet on a 50-50 ratio in venture partnerships. CEOs are not 50% women. Management teams aren't 50% women. But if you plotted the curves, they're all up and to the right pretty significantly. And if we keep going up and to the right on gender, we're going to get there in, I don't know, another 10 years maybe, which is a long time. I realize many people think that's too long, but I'm just saying that, you know, we're going in the right direction. And so I think we have to do the exact same thing with race and particularly with underrepresented minorities, people of color. And I think that we will, because, you know, having witnessed what happened with respect to the gender conversation, I feel like the exact same thing is happening now with respect to race. And so I have a lot of confidence that the wheels are in motion in every company, at every board, in every venture firm, in a way that they really weren't before. And I don't totally understand why it took this event to happen. Like, why didn't it happen, you know, with Eric Gardner? Or why didn't it look, why, you know, why now? Like, why did it have to wait until now? I don't understand that.
We'll leave that to the historians to figure that out.
But I feel it in a very real way. So that's the most important thing. And at Union Square Ventures, we've committed ourselves to fixing the issues that we have inside our firm. We're also advocating strongly with respect to our portfolio companies where we have influence. But I think, and I think that's happening in many venture firms and many boards and many management teams. So that's all good. I also think we have to continue to make other investments. It's easy to say this is a pipeline issue. It's not just a pipeline issue. And so we have to do the things that we're all doing now to open up these opportunities. But it is also a pipeline issue. And so it's important that we make sure that we give people of color the educational opportunities to get them into tech companies, and that we create internships and other opportunities to create access for them where they don't currently have it. And as you know, that's an area that I've been investing a lot of time and philanthropic money in over the past decade. And I think we need to do a lot more there as well. So I don't want to leave the message that I think it's a pipeline issue, because I don't, but I think it is, that is a piece of what needs to change.
And I guess on that, since we're at our FinTech Innovation Lab demo day, is there anything in particular the FinTech community could do, either the enterprise or direct to consumer? And then lastly, how can New York City be a leader here on this issue?
Well, I think financial services also have racial inequities. We have a bunch of companies in our portfolio that are trying to make financial services that are available to wealthy people as equally available to people who don't have access. And, you know, some of that, you know, will ultimately be helpful on racial injustice. So I do think that financial services, it's easy just to serve the wealthy customers because there's more money there. Building companies that can serve everybody, I think, is more impactful. So that's something that I think the FinTech industry, many people in the FinTech industry know that, but that's something that the FinTech industry can do. And then what New York can do, you know, kind of back to where we started, New York is a melting pot. You know, it is, we have lots of people of color in New York. And, you know, the New York tech sector, the good news about the New York tech sector is it is more diverse than most of the other regions around the United States. Not nearly as diverse as it needs to be, but more. And some of that, I think, is because it's in New York, because it's in a place that's more diverse. You ride the subway every day and it's like you're just riding with everybody, right? It's just like and you're talking about getting out of your bubble, right? Like that's a good way to get out of your bubble, ride the subway.
Right.
Not a good thing necessarily to do when there's a pandemic going on, but it is a good thing to do in general.
Right. Well, hopefully this too, the COVID will pass, and we'll be back to more in-person gathering. And hopefully our next year's FinTech Lab Demo Day will be able to be in person. But in the meantime, thank you, Fred, so much for the time this morning, your thoughts, your perspective, very interesting. Enjoyed the conversation. And we'll now go back to hearing from the next company. But Fred, thanks so much, and look forward to seeing you in person at some point.
Great. Thank you so much. And good luck, everybody, with Demo Day.
And now back to our Demo Day program. Next up, I'd like to introduce Richard Tarling from Goldman Sachs, who will say a few words about Arthur AI. Richard?
Hi, my name is Richard Tarling. I co-lead digitization and workflow engineering at Goldman Sachs. The financial services industry has from its inception relied on models to bring products to market and manage the returns and risks of those products. Increasingly, our industry is expanding its use of models across all areas of the enterprise, moving from well-understood statistical models to more opaque machine and deep learning-driven models. The performance and explainability of these black box models are much more difficult to comprehend and manage, presenting a particular challenge for our heavily regulated industry. The team at Arthur AI, with their over 5 decades of experience in delivering high-leverage machine learning systems into production, including in financial services settings, have made it their goal to make every model observable, equitable, and auditable to drive understanding and improvement of AI-based systems. It is my pleasure to introduce Adam Wenchel, CEO of Arthur AI, to explain to you how Arthur AI can help centralize AI monitoring, performance management, and auditability to manage model risk at enterprise scale.
Hi, my name is Adam Wenchel. I'm with Arthur. At Arthur, we help banks and insurance companies and other leading enterprises take control of their AI operations. We know the world today is increasingly being run by artificial intelligence and machine learning and advanced algorithms, whether we're talking about self-driving cars or warehouses staffed by robots, or whether we're talking about financial services where a lot of the key use cases like underwriting, credit, anti-money laundering, fraud, and a whole host of others are increasingly running, wholly dependent on the performance of models. And, the challenge is when you take it out of the lab and put it into the real world, it doesn't always work flawlessly. So a little bit about myself. Prior to founding Arthur, I spent 3 years at Capital One, where I founded and scaled up their AI team. And we delivered production machine learning systems all across the bank in a number of different lines of businesses in increasingly sensitive areas. And I really learned a lot about what it takes to avoid some of these pitfalls and how you are successful with production AI. And so in starting Arthur, we've really focused on 3 big areas around this monitoring and observability. The first is performance. How well my models continue to perform. Almost the second they go out into production, they start to degrade. Explainability. Can I explain every single decision my model's making, even if I'm using advanced deep learning or neural nets? And the third one is around detection of unintentional bias. And all 3 of these are incredibly topical right now and incredibly important. People are realizing just how critical they are to get right. As a matter of fact, the Wall Street Journal wrote an article recently talking about how COVID-19 has caused such rapid changes in consumer habits, whether it's healthcare or spending or any of these other areas, that machine learning models have struggled to adapt because they were trained on historical data that no longer is all that representative of what people are doing. And in that article, the chief digital and analytics officer for a large Fortune 100 health insurer said that a key part of their strategy to deal with that was the use of the Arthur platform. And that has really enabled them to adapt quickly, recognize where there are any issues they need to address, so their business can continue to perform very well. One of the key things I'd like to express too about Arthur is because we come from an enterprise background, we really are sensitive to making sure that the platform scales, it's got enterprise-grade security, it's very easy to deploy, and it services the full range of stakeholders, not just the data scientists and the engineers, but people in compliance and business leaders and others as well. So I'd like to thank the organizers of the FinTech Innovation Lab for letting us participate this year. It's been a fantastic experience. And in particular, I'd like to thank our partners, our financial services partners who have just been wonderful in terms of getting us valuable feedback and meetings. And it's been a great experience. So if you're an organization who's looking to deploy AI into production and wants to learn about a system that can help make them successful and work with a team that has a lot of experience doing exactly that, please get in touch. Thank you.
$50,000 new regulations per year, 215 reg changes per day, manually rolling them across your businesses. This is what it's like to be a bank. Painful. How do you keep up and protect the firm? Well, a proven answer is ClauseMatch, a doc collaboration software provider. ClauseMatch provides one place for regulations and policies, one place for real-time reviews, automation, and a nice audit trail. The result, a 40% reduction in process, a 39% increase in on-time policy refresh, and peace of mind of a single source of truth. So it's my pleasure to introduce Jay Leodid, the CEO, who will tell you more.
Hi, I am Jay, founder and CEO of ClauseMatch. As you may know, regulatory violations cost banks a mind-boggling $850 billion in the last 12 years. Regulators have been working round the clock to make markets safer by sending out thousands of updates and guidance notes each year. On the other end, compliance teams are trying really hard to keep up. But the regulatory landscape has become so complex that it became a nightmare to navigate and implement. I was one of those people at Morgan Stanley working on regulatory change projects, and the only tools we had available to us were Word documents, emails, and spreadsheets. And it was so painful and frustrated at times. If you ever tried to find a policy document that is related to a regulation, it really feels like going on an archaeological dig. And then once you find it and change it, how many others are impacted? Actually, no one knows. I believe that we need an engineering approach to help compliance, regulatory, and risk teams to cope with this complexity. This is exactly why I started ClauseMatch, where we have worked with many teams from large institutions to figure it out. Together, we built a real-time collaboration platform that transforms the way they work today. Banks, insurance, and fintech firms such as Barclays and Revolut use ClauseMatch platform for two things: policy management and regulatory change. With our policy management solution, we help Barclays to speed up their policy refresh cycle by 40%. They now have an automated audit trail going back 3 years and a single place for every employee to find the latest compliance policy from desktop and mobile. With our AI algorithms, we help our clients to manage regulatory change and map relevant policies to regulatory obligations. This brings complete transparency and proof to the regulators that the bank considered the regulations and communicated them to employees through policies. ClauseMatch is 50 people strong today, with offices in Europe, Asia, and now the US. We're super excited to be part of the FinTech Innovation Lab, as it opened doors for us to the US market. Just in the first few weeks, we already started a live implementation with one of the largest US banks, and we're working on POCs with 2 more. Our technology has found a warm welcome here, especially in the current climate where the entire workforce is working from home, and organizations have to find new tools to adapt fast. Through our platform, business continuity plans and disaster recovery policies could be updated and communicated to everyone in real time. Reach out to us and we'll help you to reduce cost, avoid regulatory fines, and provide your teams with modern tools so they can concentrate on higher value work. Thank you.
Hi, I'm Edith Vitol, Managing Director of Marsha McLennan's Strategy and Corporate Development team. This year, we've had the pleasure of mentoring True Flood Risk, led by Shelley Close. True Flood Risk provides AI-driven global property-level data, such as first floor elevation, structure type, roof pitch, and number of stories for residential and commercial properties across the globe. This unique information provides property owners and real estate firms, as well as risk and insurance providers, more accurate information to better assess the flood risk of their properties. As a result, brokers can better prospect clients flood policies can be priced more accurately, and the agent and insured experience can be improved. With that, I'd like to introduce Shelley Close of True Flood Risk.
Hi, I'm Shelley Close, founder and CEO of True Flood Risk. We are an AI-driven property risk management platform that provides individual property-level data and real-time analytics to support banks, insurers, property owners, and risk mitigation experts to identify and quantify the financial impact of flood risk. Every day, climate-related financial risks are increasing given changes in the frequency and severity of weather events and an expected rise in sea levels. In fact, over the last 30 years, there has been on average $32 billion worth of property losses as a result of flooding globally. But at True Flood Risk, we're helping our clients to better understand their financial exposure in real time by looking at it from an individual property level perspective and also looking at it from a macro level where we look at portfolios and communities at large. I founded True Flood Risk after my family's experiences during Hurricane Sandy, really to serve as a free resource to help educate homeowners just like myself. There was a huge void in being able to find any sort of specific individual property flood risk data out there. And the majority of states do not have disclosure laws whereby they need to report if a property has flooded or is at risk of flooding. Our SaaS-based solution is using proprietary machine learning algorithms and computer vision to extract, classify, and calculate property features using images uploaded by our users or from one of the 12 sources that we're licensing today. And results are delivered instantly, eliminating the previous method of physically having to go out into the field to conduct an on-site inspection, costing several hundreds of dollars on average for an elevation certificate and weeks to get the data. Today, we're working with asset managers who oversee mortgage-backed securities and real estate investments to deliver real-time insights on how an incoming weather event with projected different levels of flooding might impact the value of their portfolio. It also helps insurers understand how many claims they might have for an incoming weather event. We're also helping insurers with accelerated underwriting and pre-filling online applications and with prospecting for new customers. If you are a bank, insurer, or real estate company concerned with how climate change might impact your portfolio today and tomorrow, please reach out to True Flood Risk. We welcome the opportunity to share a demo with you. Thank you.
So it's my pleasure to introduce Jason and the Broker Buddha team here at Demo Day. Jason and the team have been a real pleasure to work with, and they've been working on a real hard problem within the insurance industry trying to solve it. The commercial industry is known for being complicated, and Broker Buddha is here to make it simple for carriers, brokers, and ultimately our insureds. Change is hard, and changing processes are even harder. However, when you're removing steps and adding value, it's hard to say no. The insurance industry is known for being slow, not known for speed, and Broker Buddha is looking to eliminate the email and getting to a straight-through process, leveraging automation. So over the last several months, we've been working with frontline underwriters, the innovation team, and ultimately IT. And our goal is to get to a POC over the next couple of weeks to really extract that value. So thank you to Jason and the Broker Buddha team.
Insurance carriers today know that getting a business the insurance coverage it needs is an administrative nightmare. But it doesn't have to be. My name is Jason Keck, and I'm the CEO of Broker Buddha. Broker Buddha is a technology company which brings together businesses, brokers, and carriers on the same platform at the same time, helping carriers with three things that everybody agrees are important. Number one, we help carriers improve their underwriting efficiencies. Which carrier isn't interested in improving their underwriting efficiencies? Our smart forms help underwriters receive digital submissions from their broker partners without the annoying back and forth traditionally associated with email and PDF-based submissions. Digital submissions on Broker Buddha make it easy for carriers to route, triage, and quote opportunities, saving them time and decreasing their expense ratios. Number two, we help carriers get more business from their already appointed agents. We surveyed about 2,000 agents 95% of them said they will send more business to carriers who provide them with real-time quotes when a client submits an application online. So our technology takes traditional PDF-based carrier insurance applications and converts them into interactive, user-friendly online smart forms, which agents can use to gather information from their clients and submit that data digitally to their carrier partners. We're doing for commercial insurance what TurboTax did for the tax industry, and 5 of the top 10 agencies in the country are using our platform already. Number 3, we help carriers get exposure to tech-forward, digitally savvy agencies using BrokerBuda today, especially the ones who are not already appointed with the carrier. Those agencies can work through our intermediary partners to still submit opportunities digitally to carriers, allowing them to grow their business before they get appointed. Now, in addition to working with 5 of the top 10 brokers in the country, we have a POC underway with one of the top 5 commercial insurance carriers, and thanks to the Innovation Lab, expect to have 2 or 3 more going before the end of the summer. And we have a leadership team with unique experiences across insurance, marketplaces, and digital media. So if you work for a carrier that has quoting or submission-based APIs, and you're interested in underwriting efficiencies, growing your business from existing agencies, or expanding to new agencies, please get in touch. You can reach me at jason@brokerbuda.com. Thanks.
Good morning. My name is Sean Madgett, and I lead business development at New York Life Ventures. Talent acquisition, development, and retention are critical functions for all businesses. And we know that the world is changing rapidly, and the skills that we learned in the past may be less relevant in the future. The speed at which an individual and a company learns is becoming increasingly important as a result of the innovation that we're all experiencing today. Fortunately, there are teams of talented entrepreneurs going after this very problem, taking a data-driven approach using modern technology. One such company is Hive, a company that I've had the pleasure of working with in this year's FinTech Innovation Lab. With that, I'm excited to introduce Sean Hinton, co-founder and CEO. Thank you.
My name is Sean Hinton, and I'm founder and CEO of Hive Technologies, based in beautiful Vancouver, British Columbia, Canada. Prior to launching Hive, I was president of the world's largest water park company. We did all the architectural design, attractions engineering, attractions manufacturing, and construction project management for the largest theme park and water park venues around the world. Think Disney, Six Flags, Carnival Cruise Lines, Great Wolf Lodge, that sort of thing. Prior to that, I was a private consultant to the Government of Canada with a remit focused on labor economics and labor mobility. A series of events in 2016 led me to begin asking the question as to why we were faced with the most advanced computing power available at the lowest cost to access it. Yet if I ask somebody, what are your skills? Technical skills, soft skills, tools, technologies, methodologies. People would have a very hard time answering that question. On the workforce side, we've seen things through the lens of job title level and credential level analysis, and all of our systems and processes are built upon this. But if we take any job title, project manager, the technical skills, soft skills, tools, technologies, and methodologies required to do that job are constantly changing. Hive is a technology that applies deep learning to automate the process of skills discovery, skills gap identification, and facilitates reskilling pathways for the Fortune 500 and Global 2000. We work across industries and across the world, now on 4 continents. An example of such a use case would be taking cloud computing. Today, we have an entire workforce that needs to be rapidly reskilled to the future state of cloud computing. And this has only been exacerbated by COVID. Hive's platform helps facilitate this in rapid time at low cost. Please feel free to visit our website to learn more at www.skyhive.io.
Hi, my name is Dave Treat from Accenture. I'm incredibly proud to co-chair the FinTech Innovation Lab with Maria, and I want to start by congratulating this year's class. You did an amazing job in what was a challenging environment. It may be somewhat ironic that the FinTech Innovation Lab was started a decade ago amidst a different challenging environment coming out of the 2008-2009 crisis. And the team had a vision and really engaged with an entrepreneurial spirit and with these phenomenal support and relationships of the financial institutions in New York to build this lab and this experience. And as I reflect now on what has happened in this year's class, that same spirit, that same creativity, that same engagement and entrepreneurial approach is alive and well and has really created a successful program this year amidst the challenge of not being able to be face-to-face. Incredibly impressed that we've doubled the number of meetings we had this year with the financial institutions, logged over 400 hours of video, and had the level of engagement and the results, I think, speaks for themselves. We've had over 50 POCs launched and just phenomenal feedback from the entire community. So a big thank you. And let me extend that. I want to thank Bank of America for their support, all of the financial institutions that dedicate their time and energy to this program, to Fred Wilson for his support, and the FinTech Innovation Lab team that facilitates and drives and catalyzes this whole process. Just always amazing to watch everyone work together in such a seamless fashion and in such a caring and supportive way. Just well done, and thank you so much. You can look on this page and see links to detailed videos to further understand what our this year's class of startups has been able to accomplish and what they have to offer. Please engage. You can find the details of how to reach out to them, and we hope that you do. This group is not just driving for the success of our financial institutions and our startups, but I'm also impressed and thankful to this group for what they're doing to help New York recover and engage and continue to make progress amidst the challenging environment that we find ourselves in. Well done to all. A big thank you and congratulations. I welcome this year's startup class to our group of alumni, and we look forward to engaging with everyone throughout the summer and gearing up for another great process next year. Thanks.